Sol is trading under a micro-resistance zone between $86.82 and $88.46 after a weak recovery attempt. The Solana Risks Further angle matters because the setup is a level-by-level fight, not a confirmed recovery or confirmed collapse. The tension is whether Sol resistance test turns into a durable change or simply a sharp data point. That is why the first read should stay close to the confirmed numbers: 85.54 reported price, 88.46 resistance, and the immediate checkpoint around 80 support zone. For a market structure story, the useful readout is how capital, liquidity, rates, or risk appetite changes after the first move. The reason to keep watching is that the next checkpoint can change the meaning of the first move. The confirmed frame is that downside targets sit near $81.7 and the $80 to $78.8 support area, while a bigger resistance wall remains near $95 to $100. The key baseline details are 95 to 100 wall and 70 to 75 risk, which give the story scale without requiring speculation. This scene grounds the viewer before the mechanism takes over. If the baseline changes, the rest of the story changes with it, because the consequence depends on whether those confirmed details keep holding. The most important baseline split is between what is already visible and what still needs confirmation from the next public signal. That scope keeps the segment focused on the mechanism that actually changes outcomes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The structure matters because the short-term structure is bearish, while the long-term argument says the correction may already be close to a macro bottom. That is the working engine behind Solana Risks Further, and it explains why the event cannot be read only as a surface move. In this case, the mechanism connects 85.54 reported price with 80 support zone. When that connection weakens, the story becomes less about the initial number and more about whether the system, market, or policy process can absorb stress. That mechanism is the reason a viewer should watch process quality, not just the largest number in the story. The pressure reaches the clash between those views makes the $88.46 break and the $80 hold the practical levels for traders. For viewers, the useful question is who actually has to react: users, traders, issuers, regulators, operators, or institutions. Here, Solana sits at the center of that reaction, while Solana shapes the next practical step. The consequence is strongest where the event changes access, trust, liquidity, compliance planning, or the cost of making a decision. That makes the impact measurable through behavior, not through hype around the topic. What is not proven yet is the long-term bottom case is not confirmed unless Sol reclaims higher resistance and stops printing lower highs. That limit matters because the confirmed facts do not automatically prove the most aggressive interpretation. The safer split is to treat 88.46 resistance as established context, while leaving the unresolved part open until a stronger signal appears. That keeps the story useful without turning a partial data point into a conclusion. The open point should remain separate from the confirmed facts until a filing, market move, patch, data release, or official action closes the gap. If later evidence changes the read, the story should adjust around that evidence. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The move to track is the next signal is a clean close above $88.46 or a breakdown toward the $80 support zone. For Solana Risks Further, that is the point where the story either gains confirmation or stays stuck as an unresolved market, policy, security, or adoption question. The practical readout is to follow 80 support zone alongside the supporting details, 420-day phase, and 85.54 reported price. If that next signal arrives, the story moves. If it does not, the only confirmed position is the one already visible in the evidence. The viewer should leave with one concrete checkpoint, not a prediction about where the market or policy process must go.